Good morning from Chicago traders. It is 7:45 a.m. here in Chicago on Wednesday, the 15th of October, 2025. We're right here in the middle of the month. This is TraderBite number 2701. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. So this morning, looking at the pre-market summary sheet from Convergent Trading, we have pretty mild risk on. We've been rallying since the drop after the close yesterday in the indices. The Russell really ran ahead yesterday and today. And we're looking at Bank of America, Progressive, Morgan Stanley, and Abbott all having reported. United Airlines after the close. I'm not going to go over earnings here. I used to spend time going over earnings and so on, but that's not in a volatility regime like we have now. That's not really the market's already rallying in anticipation of these. They're not really driving the day trade, so to speak. As far as themes, we're looking at the Chinese inflation rate came in lower than expected. EU industrial production higher than expected. U.S. empire manufacturing higher than expected. The U.S. government is still shut down. Secretary of the Treasury, Besant, was just talking about this, that people who are terminated by the federal government will get absorbed into the private sector and so on. But there is little to no progress in terms of some sort of a negotiation, some sort of a good faith effort to resolve this. A slew of central bank speakers today. Fed's Chair Powell yesterday spoke and signaled that rising job market risks nearing the end of the balance sheet runoff and another rate cut this month. I think that's, like I said, that's pretty much on automatic, the rate cuts right now. There's not much that these guys can do to stop that. Japan's LDP leader Takahashi asked Innovation Party leaders for their support in a premiership vote, and coalition talks will start from Thursday. China to play hardball. Yesterday, Trump came out and said that they're going to stop buying cooking oil from China. So it's a tit for tat thing. And 100% tariffs are slated for 2 weeks from now on November 1st. They're trying to put pressure on China, but I don't know. We'll see how that plays out. Strong earnings from LVMH, Louis Vuitton. Decent earnings report today from ASML, BlackRock, and NVIDIA. Strike a $40 billion deal to take over one of the world's largest data centers. Data centers are a big thing right now. Lots and lots and lots of computing power is needed for the AI revolution. I'm not going to go through the calendar here. You can read it yourself. You probably have your own calendar. It's not worth the time to go through it. Just note that Lagarde is speaking at 2 p.m. Eastern for the ECB. And then the rest is just a lot. At 2 p.m. we also get Beige Book, and the rest of it you can check out yourself. Looking at the S&P is in a trend right now. It's one-time framing up. Intraday, it's traded 177,000 contracts, which is not too far from where we would normally be. Remember, the mode for volume at this time is about 130,000. We're at 177. The edge of what we would consider normal for the S&P is 230,000. So that's quite a contrast from Friday and Monday and Tuesday's volumes. Things are calming down quite a bit. The inventory is 97% long, and the range is quite wide at 57.5. It's in a second standard deviation range. Looking at the RN RVol, you'll see that we're getting pretty good range. Volume is in line, except for the Russell, which has pretty strong range and volume as it did yesterday. Russell up 1%. The Dow is getting pretty good range and inline volume. Crude is really, really quiet. We've got 76% full range, 59% for volume. So crude, for those who are in the accelerator program, live trading week this week, crude is not going to get our attention today as it did not yesterday. It was stuck in a range unless it breaks out on pretty decent volume. It's up a little bit today, up 44 cents. It's come out of that 58 handle, which was our target for the last 2 weeks. And then we have the metals dominating again. Gold reaching a new high, $4,200 per ounce, and silver at 51.32, also up 1.38%. The cryptos are still kind of licking their wounds a little bit. ETH has come back just a tiny bit. Bitcoin held steady, and all of the altcoins got crushed last Friday, absolutely demolished. But the majors stayed steady. So really interesting outcomes there. Let's take a look at what the market has done. Okay, so the ES. So yesterday, the primary scenario was expected to be actually a move down. It's loading volume right now, but yesterday the expectation as we were opening down below, let me get my colors scheme right. We were opening down below, down here, and the expectation is a quick attempt higher and a push to test the prior point of control and then to break down and squeeze lower. So we were looking for at least an extension down into that 65.40. What it ended up doing, and we watch this in real time in the execution lab, is it went right to the naked point of control, naked settlement from last Friday, went right to it. You could see the low right there, and put in what we call an excess low. And so from there, the excess low, as soon as it crossed back over the open and extended the range, the opening range up, the shorts were off the table and it was time to start looking at longs. I was looking at a short and actually took a short on the pullback looking for a continuation trade, but it ended up squeezing higher, and then we had this really strong push up. Formed the initial balance up here at the prior session low. The initial balance and the prior low a day were the same price yesterday, so short time frame traders were in control there for quite some time. Consolidated in this area, set up a nice little push higher, and then later on it sold off on the cooking oil remarks. And then since then, we've basically just have been riding up. You can see that yesterday we had a multi-distribution thin profile. We extended the IB more than 2 times, or almost 2 times, almost a trend day. We held this area up here, pre-marked stock zone up there, and pulled back. And what we have this, so we had a trend day up, expected some sort of a push higher in the overnight session, but the sell-off yesterday put a lot of doubt on that. You could see that we settled at 66.86 with the high at somewhere around 60. What was the high yesterday? 67.2250. Pretty decent pullback right into the mid. The setup actually a pretty nice trade up down here. I'll go over that with the AP attendees to explain what happened there. And then from here, we reopened and we were steadily pushing up, and we have decent separation between where we are and the day generated prices, the FSV WAP in mid. And we have a multi-distribution profile with the point of control just below where prices are. So It's kind of a messy open. It's definitely out of balance. We have an intraday imbalance. We have an imbalanced market condition against prior days. You could see that we've shifted the point of control higher in the overnight session. We shifted yesterday's point of control against Monday's point of control higher. And we are basically well on our way back to the news where the news got disrupted, right? If you recall, the news got disrupted around 97, 67, 92.50, right up in here is where the China news came off. And we have more than taken over 50% of that drop down. We had a spike on a retest. We had a slightly higher low against last Friday, and now it's pretty much squeezing higher. So the goal here this morning, what are we looking for as we look to trade the open this morning? The main thing to look for is a response. So the question becomes, again, we're opening in a gap versus the prior day. We're opening in range versus the sell-off. But we're just looking at the prior day. What we have is a market that's right up against the overnight high. It's very likely to push. We're looking for a pullback into the prior range, and then a consolidation, and then eventually a continuation of the exploration higher, right? We're currently trading at 67.30. We're expecting about 60 points of range. And if we pull back to 67.20, that puts 67.80 up here as a target. So that's the primary scenario for the continuation of what we have today, okay? The secondary scenario, which would be a nicer intraday trading, day trading experience, is to push up, consolidate, roll over, impulse down, back through the open and the opening swing, and then to dip into the prior range. If it dips into the prior range and has a hard time coming out and holding these prices, then we're looking for a short, and the target becomes prior settle. So prior settle has about a 73% historical probability in an open in range scenario, but in an open above scenario, that probability actually drops. In fact, the historical probability in the open above scenario is, where are we? It drops to about 55%. Here's where I get these numbers, just so you know. This is what we call the market stats report, the MSR. These are historical probability. This is a quantitative analysis based on these specifications, 747 days, so pretty good sample size. And we're opening above the prior range. We're opening above the prior range. So the prior close being touched, drops to 55%, as you see right there. Let me clear the screen. So that's where the 55% comes from. Now, if we open inside of the prior range, it has dropped. It was about 76%, 73.63%. And those are some of the really interesting statistics, things like that I pay attention to. If we open below, the half gap gets about 76%. If we open above, the half gap gets about 85% historical probability. Remember, these are historical probabilities. The probability would happen today is unknown and unknowable. This is your IB stat right here. That's what we call the IB stat. And if the current IB forms inside of the prior IB, if we open inside of the prior IB, there's a historical probability of 81% breaking that prior IB. So these are real quantitative stats that you can lean on for exits and so on. Again, crude, not much expected here. It was consolidating quite a bit. Yesterday, as I said, was pretty choppy, and then it was consolidating pretty much the entire session until just now, and it broke through the 59. So it's starting to, the crude is starting to look interesting. The relative volume in crude, however, is 59% currently. It's very light volume kind of movement. The NQ, same kind of scenario as the S&P. We're opening in a gap. We're pushing up against the overnight high. Multi-distribution profile, good separation on the DGPs and the overnight stat. And so overall, we're seeing the same thing. I'm expecting this to continue higher as the primary scenario in NQ as well. I'll leave you with those thoughts, and I'll catch you tomorrow morning at 7:45. This week, every day, 7:45, because we're doing the accelerator program through Monday. Monday is the last day of the accelerator program. That cohort graduates, and then we go back to our Monday, Wednesday, Friday at 8 a.m. Central, 9 a.m. Eastern schedule. Good luck. Be sure to hit the like button. And be sure to subscribe to the channel if you have not. If you know someone who could benefit from having some structure based on someone who's been trading for 25 years as a professional, I would invite you to invite them to this channel. Good luck.